Our next presenter unfortunately can't join us here in Kalgoorlie. I think there was a cancelled flight this morning, so we're welcoming Sean Werner, Managing Director and CEO of Syrah Resources, via Zoom. So great to have you, Sean, virtually. Sean is a senior resource industry executive with extensive general management and cross-functional commercial operations, supply chain and leadership experience. He joined Syrah Resources in October 2016 and was appointed CEO and MD in February 2017. Prior to joining Syrah, Sean was at BHP for 20 years in a variety of executive roles with international commercial and operational experience across a range of commodities including copper and base metals, uranium and thermal and met coal. We look forward to hearing about Syrah Resources today. Thank you, Sean.
Thanks very much. Good afternoon, and thanks for the opportunity to talk about Syrah today, and apologies that this morning's flight cancellations mean that I can't be there in person. I joined Syrah almost 6 years ago to help take the extraordinary Balama resource to an EV market that was expected to transition to enormous growth. Having returned from Mozambique yesterday and from the US a few weeks ago, I'm really excited to say that despite some challenges in the intervening years, Syrah is already a major supplier to this market and it's primed for a very positive period ahead. I'll start today with 4 key messages on Syrah's unique position in the natural graphite and anode material supply chain. Natural graphite and active anode material demand will increase 5 times and 9 times respectively over the next 10 years. Syrah is the only operating vertically integrated natural graphite anode material supplier outside of China. Balama is a 350,000 tonne graphite producer in Mozambique, supplying global battery anode and industrial customers at large volumes since 2017. And at Vidalia in the USA, we're building an 11.25 thousand tonne anode material facility with commercial sales arrangements in place with Tier 1 customers, namely Tesla and Ford. Whilst much is said about the long-term battery materials market growth, the recent period has seen some extraordinary short-term expansion. EV sales went from 3.2 million in 2020 to over 6 million in 2021, and they're expected to reach at least 10 million units this year. Chinese anode material production has gone from 20,000 tonnes a month to 100,000 tonnes a month over the past 2 years. And the Chinese natural graphite market has moved to a net import position this year, even during the Chinese domestic production high season. And only Syrah is supplying meaningful import volumes into this market at a time of huge growth. The very strong market conditions are supporting operational capacity ramp-up, sales growth and capital development. Balama is a market-critical natural graphite operation and it is the largest integrated mining and processing facility globally. Over the past 18 months, our weighted average natural graphite sales price has increased by around 50%, and the price reported for the downstream natural graphite anode material has increased by 40% over the same period. Syrah is the largest import natural graphite supplier into the Chinese anode supply chain, and we're selling today to many of the major producers and spherical processors. And whilst we've been constrained by shipping recently, Balama production and sales have not been constrained by operations or by customer demand, both of which continue to strengthen. At Vidalia, we've put commercial arrangements in place with EV customers, a binding offtake contract with Tesla and a development MOU with Ford and SK On. And we continue to engage with more than 10 potential customers on qualification, on testing and on further commercial negotiation. And this has enabled us to take a final investment decision to fund and to commence construction of the expanded anode material facility at Vidalia and accelerate a further DFS for the next stage of expansion to 45,000 tonnes. And last week, we received a binding confirmation of a US Department of Energy loan demonstrating the criticality of Vidalia to the battery supply chain in the US. And this is the first Advanced Technology Vehicle Manufacturing Program loan in 11 years from the DOE, and the first ever to a raw materials producer, and that's inside or outside the US. So with EV penetration hitting critical mass across many markets, the growth trajectory is really strong. By 2030, analysts expect electric vehicles at around 30 million units per year, lithium-ion battery production at 2 terawatt hours of production each year, and natural graphite demand at more than 4 million tonnes per annum versus just over 1 million tonnes today. So clearly there's a major need to expand both natural graphite production and anode material supply. Unlike cathode material, practically all of the lithium-ion battery chemistries have primarily a graphite anode. It is the largest material component in the battery by mass. And as you can see on the charts on the right, natural graphite is expected to increase share in the anode from around 35% today to 50% by 2030. And that's based on both cost and ESG considerations. And most importantly, apart from 5 to 10% of silicon additives in some products, there's no major substitution of that anode composition that's expected. So Syrah has an outstanding value proposition as this market evolves. We have large-scale vertical integration, selling anode material from Vidalia to ex-Asia lithium-ion battery customers and natural graphite to the China anode material market. We have the largest integrated upstream natural graphite production capacity at Balama, and we have the first ex-China vertically integrated downstream capacity at Vidalia. We've got a competitive anode material cost position at Vidalia, even against Chinese production, and a sustainable and low cost curve position as Balama continues to ramp up capacity in the coming years. We have a leading ESG position with a low greenhouse gas emissions footprint compared to other producers and full transparency of the supply chain. And finally, Syrah has significant expansion potential. We've got phased commercial anode material expansion underway at Vidalia and low capital intensity possibilities for Balama to expand in the future. Looking specifically at some of the key elements of the Vidalia downstream position, Vidalia has been designed for utilisation of the high-quality, high-grade Balama feedstock to achieve excellent anode material performance, and we continue to optimise the product performance parameters with our customer base. There's expansion optionality available in our anode operations, and of course that's underpinned by the massive scale of the Balama resource. As I mentioned, we've just completed a full chain life cycle analysis with peer-reviewed benchmarking, demonstrating that for the full anode chain, we have significantly lower greenhouse gas emissions intensity than Chinese natural graphite or artificial graphite anode material operations. And we're at 7.6 kilograms of carbon per kilogram of anode material produced. We offer that full traceability and transparency from mine to anode production, and that's something that's hugely valued at the moment by potential customers. But most importantly, Syrah is offering an ex-China sourcing diversification alternative at high volume. And that provides security of supply at a time that buyers are hugely aware of the need to diversify their supply risk. We have a very clear view on expansion to become a leading global supplier of anode material. We've got more than 6 years of anode material development already, leading to commercial arrangements and qualification progress. And our commercial facility construction is funded and underway, and we're expecting second half of 2023 production. We have a DFS in progress to expand further to 45,000 tonnes immediately following the initial expansion, subject to board approval and FID. And we have a process underway to investigate options to partner in Europe for a second anode material facility. The Vidalia operations and expansion project are strongly market driven. The project's underpinned by the binding offtake we have in place with Tesla for 8,000 tonnes per annum for the first 4 years of commercial production, subject to final qualification upon the commencement of operations. And that's enabled the $102 million of US government loan support. We've deliberately targeted a mass market direct substitute anode material product, and we've worked through qualification with customers using a fully operational commercial scale facility. Syrah's anode material has also been demonstrated to have excellent physical and chemical properties and electrochemical performance. We're using a market standard milling, purification and carbonisation process, but with improved emissions and water management, with our acid purification specifically designed for safe operation, neutralisation and disposal. And for all of the commentary that exists out there on the potential for acid-free purification, it is not an issue within the supply chain when managed well, and it is the only process that's currently used commercially in natural graphite anode production today. So we're looking forward very much to the Q3 2023 start of production at the expanded facility. Turning back to the upstream natural graphite market and Syrah's extraordinary endowment at Balama. Almost all growth in graphite is driven by EVs and lithium-ion batteries, and the anode market consumes a -100 mesh fine flake graphite, not coarse flake. Balama is configured for around 80% of current production to be fine flake. And with Chinese domestic fines production stagnating and cost increasing given environmental constraints, and future projects taking longer to develop, we have a very positive view on the pricing dynamic in the upstream market. Even without any further resource conversion, Balama's reserve makes it the tier 1 asset in the industry. Fine flake demand growth will lead to a coarse flake oversupply as a byproduct over time, and this will invert the historical pricing dynamic, with fine flake products driving price growth in future. Apart from Balama, there's been little progress on additional supply. Many potential projects out there have a very optimistic operational and market price assumption set, whereas Syrah has worked through some very tough periods in a high volume market entry and has 5 years of hard-won sales and operational experience on which to base our future plans. So all of this supports an operation which has matured really strongly over the last 18 months. Balama has a 50-year mine life on current reserves at 350,000 tonnes per annum capacity, and further capacity expansion is readily deliverable. But what's most pleasing is seeing the mine, the process plant, the TSF and the workforce infrastructure delivering step changes in recovery and quality. We've got a fantastic team of 96% Mozambican nationals on site, and that's something that's regarded really highly in country by government and community. The differentiated ESG position at Balama is supported by an 11 megawatt solar and 8 megawatt battery project currently in construction, and that'll provide around 1/3 of Balama's power requirements in future. With high quality, qualified natural graphite products already sold into the anode material supply chain at large volumes, Balama is poised to deliver real advantage as volumes continue to ramp up. It's always worth re-emphasising the quality of the Balama deposit. With over 100 million tonnes of defined reserve at 16% total graphitic carbon and the 7.2% cut-off grade, Balama's waste is higher grade than the core of many development projects. We also have over 1 billion tonnes of further resource at 10% total graphitic carbon. The current Ativa pit and later Mualia and Mapish have very low strip ratios and a high percentage free dig operation. And we're currently delivering a feed grade of around 19% TGC to the process plant. Balama's mining simplicity is truly extraordinary, and we still have the development of our vanadium byproduct stream to come. So what does the combination of Balama's asset quality, Vidalia's vertical integration and strong market growth give us? Currently, more than 85% of anode material globally comes from China, and the balance 15% uses Chinese precursor or spherical graphite material, some of course which is produced using Balama fines. Balama and Vidalia are therefore critical to market growth and to supply diversification. Balama for the upstream supply internally and to the China market, and Vidalia for the downstream supply of anode material for the ex-Asia lithium-ion battery and EV manufacturers. Our operations, marketing and capital plans are based on real-world pricing, production and life cycle assumptions, and we have deep operating and development experience. And as these assets mature, we've got a compelling cost base and are looking for very positive margins and returns. And as a result, we see growing appreciation of Syrah's contribution to critical mineral security and sourcing diversification. And we're looking forward to keeping everyone up to date on our progress. Thanks very much.
Thank you very much, Sean. Any questions from the floor? Sean, I probably have one question for you. During the course of today, we've heard a lot about cost pressures in the industry, particularly here domestically in Australia. How are you finding things at Balama presently in terms of sort of cost inflation and cost pressure?
We have seen some cost pressure over the past quarter in particular, particularly with diesel prices, and sea freight prices have been obviously astronomical for the recent period. We did a lot of work in 2019 on restructuring our cost base, and the increase in volumes that we're expecting over the coming periods will see our unit costs come down, but we're also doing some additional work on cost mitigation strategies as we move ahead.
Terrific. Thanks, Sean, and thanks for joining us virtually. Cheers.
Thanks very much.